Welcome to the Organized Expat, brought to you by Tytle, the platform for expat taxes. Hi everyone, welcome back to the show. Today it's tax simulation day, and as some listeners know, we pick a country when we do a tax simulation to look how different people with different income levels, so-called profiles, how they are taxed in that country. But today we're going to do it a little bit differently. We're going to pick a profile, in this case a crypto trader, and then we're going to look how much this person will pay in different countries. So we're going to take as a point of departure the profile, in this case the crypto trader. And the crypto trader that we're going to have a look at today is making 78,000 euros a year in crypto trading, and the countries that we're taking into consideration are France, Portugal, Spain, Italy, and Greece. So which country will be the winner from a tax perspective for this crypto trader? Which will be the most attractive country to settle in for this trader? We're going to find out. And as always, I'm doing that together with our tax expert, Laurens, who knows everything about taxes, and in particular about expat taxes.
Hi, everyone.
Hi, Laurens. So let's get started. As mentioned, crypto trader making 78,000 euros a year with crypto trading. So where shall we start? Perhaps with the winner of, and by the way, the countries, Portugal, Spain, Italy, Greece, France, as mentioned. So shall we start with the winner, or do we want to talk a little bit more about crypto trading and the...
Right, we can keep the listener in suspense for a bit more.
Okay.
Even though I think most people will already know who the winner will be, but let's get
Probably,
back to that.
because it's a well-known country,
It's a
or
well-known
well-known
country.
for crypto people.
So yeah, I think it's good to mention that, because crypto is quite new. So let's say in 2000, you would not see the word crypto in any law book or in any tax system.
At least not in the sense that we use as a crypto.
Exactly. So for example, in the Netherlands, they just said at some point, okay, crypto falls under this category that already existed, and most countries did it like that. And then some countries made special crypto rules or laws. Because I don't know when it started exactly. I think 2012, 13. I think that's when you really started hearing about.
But it was, I think, in the year of the financial crisis, 2008, that somebody came up with the paper, or maybe 2009. Then a few years later, it really took off slowly first.
Exactly. So that's when lawmakers had to be alert and make sure that there was a juridical framework, to be able to tax those crypto gains, which is the same with other things that we can talk about in other podcasts.
And I always hear that typically lawmakers are slow to act, so they gear up very slowly. And then all of a sudden there's a barrage of legislation, way too much, way too little in the early days, and then way too much later on. But
yes, exactly.
Is there, let's say, crypto trading or crypto trader, crypto? You have, of course, mining cryptocurrency. You can trade in currency. Are there things we need to know to better understand taxation, or can we just start with, let's say, making gains on your crypto? Maybe that's the easiest way to start.
That's the easiest way, indeed, to just assume that this profit that we were talking about, that is a profit that you make in trading in cryptocurrencies. And then, of course, all countries will have a different way of taxing that. That's a different...
But we can talk a little bit about mining, because that's, let's say, not too difficult to explain to the less sophisticated listener when it comes to crypto, and that could make a difference for taxation.
Exactly. So most countries have a distinction between regular crypto trades or gains and mining, because with mining you do a little more effort yourself. So if you look at the 5 countries that we have, and you look at Portugal, for example, then mining, for example, it will be personal income, maybe sometimes capital income.
So mining, for the people who don't know, is solving mathematical puzzles with your computer. Requires a lot of electricity, but you solve a puzzle And in doing so, you verify transactions and you create, let's say, additional currency. Yeah.
Exactly. So yeah, you could see, for example, in Spain, that is just seen as regular income. In Portugal, it's also seen as personal income, whereas other cryptocurrencies, we'll get to speak about it later, could be seen as, for example, more capital gains.
Portugal, it's personal income.
Mining, yeah, exactly.
Mining,
personal income
yeah.
or capital income depends a bit on exact, because this is complicated business.
Yeah.
So it could be either personal income or capital income.
Yeah.
Then you see in Italy that it's not clearly defined.
By the way, we're now only talking about mining, not talking about making gains with your crypto trading. Okay, so only mining. Okay, personal income, yeah.
Exactly. So in Italy, you see it's not clearly defined. Probably regular income. In Greece, for example, the regular tax tariffs, the 9 to 44%. Those are the progressive tax rates. So you often see that, and I would say that is the tendency in most countries, that mining gets seen as either personal income, just the same as if you were to have a regular job, or some kind of business income.
Yeah, because we went through those countries quite quickly, but you could say that it's either not really defined,
yeah, exactly,
or if it's defined, for example, Portugal, then it's personal income, but most of the time it's not really defined, and you just have to look at the regular tax tariffs, tax rates that you pay.
As a rule of thumb, I would say.
As rule of thumb, yeah. Okay.
Whereas in general, in most countries, you'll find cryptocurrencies in the same sections of the tax law as capital gains. You know, just trading income, the more regular one, and then mining is more seen as it's taxed the same way as, for example, being a freelancer or having a business.
Yeah,
and that's a bit different.
And that's also, let's say, you can imagine why that is, because you're using your computer, you're using your energy.
Yeah.
It's like you're a little factory.
Exactly.
Yeah,
so there's more of a labor component to it.
There's a labor component to it.
Exactly.
Yeah, exactly. Okay. Okay, so that's as far as mining is concerned, and staking is probably a little bit too technical, but often I think it's in tax terms, it's quite related in how it's taxed.
Right.
Yeah. Okay. What's next? What are we gonna have a look?
Right. I think we could maybe just look at the normal tax rates for cryptocurrencies.
Yeah. So not as a miner, but just as a trader.
Just if you have crypto. So yeah, maybe we're giving away the winner country a bit like this. But Portugal used to be the crypto hub, really, because Portuguese lawmakers did not really care about crypto at all. I mean, maybe they did care by not caring.
Yeah, it didn't exist in their eyes.
Exactly. So there was no tax framework or anything to tax crypto gains. And I also think they didn't want to, because they attracted a lot of people, especially in combination with NHR. That was a very attractive tax regime. But the law changed there slightly. So what it boils down to right now is that if you hold cryptocurrencies for more than 1 year, it's still untaxed. So that probably makes them the most attractive crypto country in Southern Europe still. If you trade within 1 year, it's seen as a short-term trade, then the 28% tax tariff applies, which is the same tariff they use for dividends, interest, capital gains, etc.
Yeah. And holding it for more than a year, then perhaps you could even argue that you're not really a trader, you're more an investor.
Exactly. Yeah.
Trading has this connotation with selling, buying. So if you're
But of course, if you, for example, have a normal capital gain that you also hold for 4 or 5 years, for example, then you do pay the 28% tax. So it does seem that this is a little gift to crypto people.
So even though you're holding it for more than a year and you would qualify as a typical investor, paying the typical tax rates for capital gains, as a gift to crypto traders, crypto investors, whatever you would like to call it, they tax it at 0% if it's for more than a year. But if you're really a super active trader, meaning that you're within the year, you're buying, selling, I don't know whether that qualifies as super active for many people, but let's say from a Portuguese perspective, then you will pay 28% on your gains.
Yeah.
Okay.
Exactly.
Spain. How does Spain treat
Right. So
that?
in Spain, you have we did a little calculation there. So in our example, where you earn 78K in crypto, you will pay around 16,000 in taxes because they have a progressive tax rate on cryptocurrency.
Okay, so you make 78,000,
Yeah.
because that's the assumption of this whole podcast. You're a crypto trader, 78,000, and you pay in taxes
16,000.
16.
Yeah.
Okay, 1/6 in Spain. Yeah, which is quite fair.
Yeah.
It doesn't sound as heavy tax burden.
It doesn't.
No. Oh. Okay, so that's in percentages. That's about.
I would say 1/5, probably, but
yeah,
it's still quite acceptable.
Yeah.
For crypto people.
Yeah, and Italy. What about Italy? How do they look
Right.
at
So
crypto?
Italy has a 16% flat tax on cryptocurrencies, a 2,000 euro exemption. But to keep things simpler, you could also choose to pay 14% of your portfolio value on the 1st of January.
Yeah.
So you don't have to keep track of all trades that you do within that year.
Yeah. Okay.
So that makes it. In the calculation that we did, we had a tax of around 20,000, so a bit more unfriendly than Spain. But yeah, I mean, it depends, of course, on what your portfolio value is, because if you choose for that alternative taxation, you could pay maybe less or maybe more.
And it's funny in a way that Italy, and maybe I'm completely wrong here, but Italy sometimes gives you this option to choose either to go for the regular route or to get a flat taxation. Also for the super rich in Italy, they can just say 200,000 euros, and then I don't pay any taxes on top of that for my, for example, dividends from abroad or investment income from abroad. But you have that option to say, okay, we're not going to look into the exact numbers, but I'm going to pay it off with 200,000 as a flat rate. And here again, you see that you can either pay 16% flat tax with 2,000 euro exemption, or you can just pay 14% on your portfolio value on January 1st. Exactly. So again, Italy is flexible. You can go for A or B, and it's up to you which route to take. Okay.
Exactly.
Yeah.
Then Greece, short-term gains are progressively taxed, so that's just their 9 to 44% tax rates. Then the long-term ones, this is not in effect
but
yet.
That's good to, let's say, dwell on a little bit longer. 44%.
Yeah, so those are just the regular personal income tax rates. So they could go up to 44% if it's a short-term trade.
But still, if you're, let's say, a short-term trader, Portugal would tax you at 28%. Greece, if you're doing a good job.
In our example, you were doing a good job.
Yeah. Exactly. So then you're paying 44%, and that's almost double what you pay in Portugal.
True.
And also compared to Spain and Italy, Greece doesn't want to attract crypto traders, it seems.
Well, I mean, they do, because in 2025, what they're going to change is that for these long-term holdings, they're going to change it to a 15% flat tax, which is a bit more in line with the other countries, keeping things a bit simpler. And I mean, I think because all these countries have some kind of expat tax regimes, they want to attract foreign talent, and that goes hand in hand with attracting crypto.
Because the crypto crowd, I think, is kind of crowd. They're generally speaking, they're younger.
Exactly.
They're educated often. So
often with startups
and with
other ideas
associated with
so
startups.
They bring some kind of activity to the country.
Exactly. So that's a kind of crowd that you would like to attract. So it makes sense to design legislation geared towards crypto traders, or to have special gifts for crypto traders. And we see that Greece is now preparing such a gift, so to speak. 15% flat tax when it's a long trade, so more like an investment.
Right.
And France, what about France?
Right, so in France it's a 30% tax rate with an exemption of around 300 euros. But France also makes the distinction between professional crypto traders and just regular crypto gains that you and I could make. For those professional traders, it could go up to 45% in taxes. So yeah, that then there's a lot of requirements, a set of requirements that make you a professional crypto trader or not. But otherwise, it's 30%, which is a bit higher than the other countries. So yeah, if
so clearly not the winner.
Not the winner, exactly.
But it's also not as brutal as the 44% that you see in Greece for the short term. Games, So we would definitely say that Portugal is the winner here.
Portugal is the winner, I think.
And Spain is also not too bad.
Spain comes second. It's not too bad, exactly. And then the other three countries depends a little bit on your situation. If you have short-term holdings or long-term holdings.
Yeah, exactly.
But Portugal remains the crypto country.
And how much your gain is. So if the gain is lower, then of course the 2,000 euro exemption in Italy would come in handy. But if you're making a lot, it doesn't really matter.
Yeah, that's true. I mean, of course, there's also some other nuances to make. But you can make a very long podcast about crypto. So, for example, if you trade cryptocurrencies for other cryptocurrencies, then that is a taxable event in Spain and Italy, but not in the other three countries. So you have all these kind of, I mean, these crypto laws in all those countries are quite interesting to read because they introduce a lot of new concepts. And it's funny to see how many things people need to think about.
It's really putting legislators to work because they really have to invent all kind of legislation around new concepts. So perhaps it's a nice idea to ask listeners to send in questions they have about crypto for a specific country or maybe in general, and then we could discuss that more at length next time. But I think for now, this was just a general overview, not too hard to digest, I hope. So let's leave it there, and see you next time.
See you next time.
Bye-bye.